What is cost of capital? Whatever capital investment you are making, for that what is the extra effort you are spending, that is called your cost of capital. Redeemable stands for repayable, irredeemable stands for non-repayable. WACC stands for weighted average cost of capital. Hello everyone, this is your Adarsh, lecturing Vidhyaashram First Grade College, the Temple of Excellence. So we are in the session 1 of your topic called cost of capital. Now, just now we completed your unit 1, that is your introduction to management as well as your time value of money. Now, so it was an interesting topic, your time value of money, like your present value, future value, compounded interest, everything we discussed. Now we are into topic called your financial management. Now, under financial management, the topic we are discussing, that is cost of capital. What is cost of capital? You know the capital, investment. Whatever you have invested in the business, we call it as capital. Whatever invested in the business, we call it as capital. What is the cost? The cost incurred for the investment, we call it as cost of capital. Very simple. You want to start a business. So what is the price of the business? Or else you want to purchase an auto. You want to become an auto driver. Example I am giving. So if you want to become an auto driver, you are supposed to purchase an auto. Auto value is how much? 50,000. So you don't have enough money to buy auto. What you will do? You will go for bank loan. 50,000 auto plus 20,000 interest. It will become how much? 70,000. Once again, I'll repeat. The actual value is 50,000. To buy this, you have to pay interest also. That is around 20,000. The total price of the auto will become 70,000. What is the cost of capital? The capital is 50. You are spending 20,000 extra. This 20,000 we call it as cost of capital. Hope you understood. So whatever you have invested, for that investment, whatever extra you are paying, we call it as cost of capital. Now, in today's session, whatever concepts are things we are supposed to discuss. Now, the first part will be called as meaning, concept as well as WACC, weighted average cost of capital. Now, what is the meaning of cost of capital? I'll not go with the definition and all. I'll make you to understand easily. Now, what is the meaning of cost of capital? The few concepts in cost of capital. Finally, we'll understand what is your WACC, weighted average cost of capital. Now, we'll go one by one. Meaning of cost of capital. As I told you, you can read it out and you can take a screenshot, but don't read all this. Just I'll give you logic as well as concept. Now, what is cost of capital? Cost of capital, as I told you, in case, for example, under cost of capital, we get 4 things. Which are those? One will be your cost of debt, debentures. Second one, your cost of preference shares. Third one, your cost of equity shares. And the last one, cost of retained earning. Retained earning. You are supposed to do your problems on these things. Cost of debenture, cost of equity, cost of preference shares, and finally we call it as retained earning. Now, everything we have taken 10 lakh each. 10 lakh, 10 lakh, 10 lakh as well as 10 lakh. Now, for debenture you are paying 10% interest, preference shares 12% dividend, equity around 15%, retained also 15%. Now, to get this 10 lakh, you are supposed to pay 10% interest. To get this 10 lakh, you are supposed to pay 12% dividend. To get this 10 lakh, you are supposed to pay 15% dividend. To get this 10 lakh, you are supposed to be paid 15% your dividend. Now, these are the cost. To get this 10 lakh, this much you must be ready to spend. This is called cost of capital. Hope you understand. What is cost of capital? Whatever capital investment you are making, for that, what is the extra effort you are spending? That is called your cost of capital. Now, the first thing we call it as cost of debenture. Now, this also we call it as KE. So, cost of debenture. So, KD, cost of debenture. KE comes for cost of equity. Now, why we call it as K? You know that the cost spelling. What is the first letter? First letter is C. Still we take the word called K. Why? Because the foreigners are Britishers. They were using capital in the letter of K, not C. Indians, we are following UK English, but foreigners, Britishers, they follow American English. Now, in the American English, they use capital as KA. That's why the cost also we call it as K. So, cost of debenture. Even though it is a C, we have used it as K, cost of debentures. Now, it is relatively easy to calculate cost of debenture. Remember, under cost of debenture means what? You have taken 10 lakh from public in the form of debenture. Debenture means loan. What is debenture? Debenture means loan. Now, for a loan, you are supposed to pay what? You are supposed to pay interest. What you are supposed to pay? Interest. For debenture holders, we have to pay interest. Irrespective of whether you are earning profit or loss, it is a fixed commitment that you are supposed to pay interest to the debenture holders. If you are taking 10 lakh on 10 lakh 10%, 20 lakh on 20 lakh 10%, or else in the agreement they have mentioned that 8% on 10 lakh 8%, 20 lakh 8%. These are the fixed charges you are supposed to pay. It will not change. These are fixed in nature. Now, hope you understood what is cost of debenture. The formulas and all I'll come later while doing problem. If I explain you now, you will not remember that. That's why while doing problem, step by step, we'll understand the formula also. And before that, one more thing I wanted to discuss in cost of debenture. We have two types of debenture. One will be redeemable. Another one will be irredeemable. First one is what? Redeemable. And the second one is irredeemable. Now, what is redeemable? What is irredeemable? Now, redeemable stands for repayable. Redeemable stands for repayable. You have taken 10 lakh from somebody. After 5 years, you will repay that. That is redeemable. You have taken 10 lakh from somebody. Until and unless you close your company, you will not repay that 10 lakh. That is called irredeemable. Hope you understood what is redeemable, what is irredeemable. Redeemable stands for repayable. Irredeemable stands for non-repayable. Hope you understood. Now, these and all your concept under debenture. Now, I'll go for the next one. Preference shares. Now, after debenture, you can also borrow money from preference shareholders in the form of what? Preference share capital. For them, we are not paying interest. For them, we are paying what? Dividend. For them, we are paying dividend. So, normally compared to equity shareholder, the dividend are fixed in nature. So, if company earning profit, pay them dividend. If company is not earning profit, no need of paying them dividend. There is no binding, there is no compulsion that they should pay dividend. Only the company earning profit, then they will get dividend. If company is not earning profit, dividend giving is not compulsory. But if they are paying means it must be certain percentage. The percentage is fixed in the form of preference shares. Now, in the preference also we have two things. One will be redeemable, other one is irredeemable. The formula to calculate, this is different, this is different. Easiest one, easily you can score. And one more advantage of this topic. What is the advantage means? What is your passing mark? Your passing mark is 24 out of 80. You know that the passing is 40 out of 100. But in this, you are supposed to take minimum 24 out of 80. Now, if you learn this chapter, cost of capital, you will get 10 mark 1 question, 5 mark 1 question, 15 mark 1 question. What is the total mark? Your passing mark you can get only from this. Clear? So, you can pass your examination by studying only cost of capital. So, one of the most important topic, as well as the one more advantage is, if you concentrate here, not only for your marks purpose, if you concentrate this topic, if you go for MBA, if you go for MCOM, CA, CS, CMA, all the topics, if you go for any NET exam, UGC NET, UGC KSET, everywhere you will find this topic, cost of capital. Without cost of capital, there is no competitive exam in commerce. That's why it is the most important topic for your life as well as. So, better concentrate here, because in your graduation level, all the basic fundas will be given now itself. If you go to post-graduation, the faculty will not go with the basic concept. Directly they will go for the advanced problem. Better, it is the right time to learn your concept called cost of capital. Now, hope you understood what is preferentials. I am not going with all this definition. Why? Because you will not get any theory questions on this. That's why don't go in depth. Just understand what is cost of preferentials, and we call it as KP. So this is all about your cost of preferentials. Now, the next part we call it as cost of equity. Now, again, as I told you, I will not go with the definition. It is only for your purpose I made these slides, so that you can read it once, you will understand better. Now, cost of equity. Equity shareholders normally called as owners of the company. Again, I'll repeat. Equity shareholders are normally called as owners of the company. Now, they are the owners of the company means in the sense, so whatever they make, like whatever the company earns profit, everything goes to whom? Equity shareholders. But after paying to the debenture holders, after paying to the preference shareholders, rest will go to equity shareholders. But if company running under loss, then the equity shareholders will not get anything, and they have to bear that, they have to suffer that losses. Now, these are the quality of equity shareholder. If you want to collect money as a equity shareholders from the public, you are supposed to pay them dividend. Normally, the rate of dividend is higher than your debenture as well as your preference shares. Again, I am telling you, the cost of equity always higher than your debenture as well as preference. Why? Because they are the person who takes more risk. Why? Because if company earns profit, first they will pay to the debentures, then they will pay to the preference. If anything is left, then equity shareholders will take. That's why they need to wait until these two people will get. That's why this person is liable for more profit. The cost will be more if you take it as a equity, because they are the owners. Whatever the huge profit or anything get, that will go to whom? Equity shareholder. Now, the form in this equity shareholder, remember, there is no redeemable, there is no irredeemable. Every problem in equity, we call it as irredeemable. So once you collect money from the public as a equity shareholder, equity shareholders are the owners. So owners will not get back their money unless and until they wind up or close the company. Until they close the company, equity shareholders will not get even 1 rupee of their capital. They get dividend, but they will not get back their capital unless and until they close the firm. Now, this is all about your cost of equity. Remember, cost of equity we call it as equity, KE. Next. Retained earning. I'll give you a small example. Later I'll explain you what is retained earning. Now, in 2018, 2019 and 2020, your profit is about 20,000. Your profit is 30,000 and your profit is 40,000. Now, every year you have a habit of savings. Now, out of 20,000, you have saved 5,000. Out of 30,000, you saved 5,000. Out of 40,000, you saved 10,000. What is your total savings? The total savings is called as 20,000. Hope you are clear. What is your total savings? 20,000. Now, out of 20,000 savings, if you want to invest for some business, that is called retained earning. I'll explain you. Earning means what? Your profit. Your profit itself, we call it as earnings. Retained means what? Saved. Saved your profit is called as retained earning. You are supposed to pay any interest to them? No, because it is your own money. You need to pay any dividend for them? No, because it is your own money. You need not to pay any dividend. You need not to pay any interest. For company, any investment in the form of retained earning, free of cost. No need to pay even single rupee also. But still, we calculate cost for this. How and why? How means whatever you calculated for equity shares, the same thing has to be mentioned for your retained earning also. But in this, why do we calculate? Why do we calculate means this 20,000 instead of spending in business, if you kept it in bank, what you will get? You will get interest. You lost that interest by spending into business. Whatever you lost in the bank, that is nothing but your cost of retained earning. Hope you're clear. Yes, this is all about your retained earning. These are the four things we call it as cost of debenture, cost of equity, cost of preference shares, and retained earning. All put together, we call it as cost of capital. Now, last part, that is WACC. WACC stands for weighted average cost of capital. What is WACC? Now, very simple. Equity, I calculated, it is around 10% cost. Preference shares, I calculated 12%. Debenture, I calculated, it is around 10%. And your retained earning, we calculated, it is around 10%. You know it is 10%, 12, 10, 10. So I'll make it as a 20%. Okay. 10%, 12%, 20, 10. So what is the overall cost? I know the cost of equity, cost of preference, cost of debenture, retained earning. Individual I know, but I want what is my overall cost. I don't want individual. I need what is the total cost I am supposed to pay. You tell me. Then what I should do? I should go for WACC, weighted average cost of capital. Average of all this will be calculated with a small table. That table we call it as WACC, weighted average cost of capital. Taking the average of all four is nothing but WACC. Your 15-mark problem comes from WACC. There is a compulsory question in your examination. Now, WACC we call it as O. Why it is O means overall cost. Overall of all these four we call it as WACC. Hope you understood. Again, I am telling you the definitions are not required. Just for the appearance purpose, I have given all this. If you want, you can read out. You will get detailed explanation about this. So just we have a glance of your advantages as well as disadvantages. Now, what are the advantages you have? So you will find out the difference between a project funded by debt in terms of capital. How much investment you made in the form of debenture, how much in the form of capital. Capital means what? Equity, preference as well as retained earning. These difference you will identify with the help of this WACC. Second one takes into account the normalized cash flow. Your cash flow present as well as normalized cash flow will be identified with the help of WACC. Third one, Simple and allows management to look quickly for the project. How much you are spending for the project, how much must be your returns, everything will be understood with the help of this. One more, the advantages of WAC is very simple. After doing WAC, you got to know your cost is 12%, average is 12%. So to do this business, every month you are spending 12%, means your income must be more than 12 or less than 12. Your income must be more than 12%. If your income is 20%, then if your cost is 12, the difference of 8% is your profit. How bankers work? Bankers will give loan at 12%. Bankers will collect deposit at 8%. The difference 4% is the bankers' income. This is the way we are supposed to work out. Now, the disadvantages of your WAC. So, what are the disadvantages? Simple. The number isn't very useful. Sometimes whatever numbers you will get, it is not exact one, it is not a proper one. So because of wrong information, it may lead you to wrong your movements. Now, second one, the equity side of capital cost is done by identifying the risk of the project compared to the future project. You cannot do comparison between future and current one, so it will be risky for you. Third one, unforeseen problems may come. So few problems are there. Right now it is not there, but it may come in future. So these are the disadvantages. Please don't go for these advantages and disadvantages. These things just to make you to understand, but in your examination, they will not ask you what is advantages, what is disadvantages. But before we start problems in cost of capital, you must be aware of what is WAC, what is cost of debenture, what is cost of equity, what is cost of preference shares, how does it work, why we are preparing, in what way we are supposed to do. And formulas and all I'll explain you while doing the problems. I'll go back to all these slides so that you can take screenshot. So these are your meaning of cost of capital, cost of debentures, cost of preference shares, cost of equity shares, your retained earning, your WAC, WACC, weighted average cost of capital, WAC, the advantages as well as disadvantages. So these are the topics we covered in today's session. As I told you, theory for understanding purpose it is required, for remembering it is not required. For examination purpose only concept you take it out. Once you read out whatever screenshot you have taken, so that it is easy to work out problems in the coming sessions. Thank you.